Morning, I'm Malcolm Graham Wood and I'm at Core Finance for my CEO interview. Today my guest is Paul Griffiths, CEO of Predator Oil and Gas. Welcome back, Paul.
It's a pleasure to be back.
Nice to see you. Excellent to see you. We'll get straight into it. I mean, I'm expecting the viewers to know pretty much what's going on, so I don't want an overview. Predator is a company with operations in Trinidad, Morocco and Ireland. So I'd like to start in Trinidad. It's become very newsworthy lately. So why don't we kick off with Trinidad, Paul?
Yeah, when we put out our interims, that was to give everybody a pretty detailed update on what was happening. And then yesterday we put out an update, an operational update to address what was happening in Trinidad, Morocco and LNG Ireland. And didn't really go down as well as we anticipated, would be fair to say. And that's, frankly, that's quite annoying, for the management and the loyal shareholders. So, it's important to reiterate what our game plan is in Trinidad, and it has always been. And that was to build a CO2 EOR business based on exclusivity of CO2 supply, which we announced yesterday. We extended to 2022, and also the pilot project in its Trinity. And all that's been very successful today. It's taken longer than we'd hoped for, but you have to remember that this was the first CO2 EOR project for 25 years in Trinidad. So nothing's going to happen overnight. And that's one reason why things tend to drag on a little bit. But having said that, we've been very successful in executing the project. We've injected 400 metric tons of CO2. We're now moving to the stage where we're just imminently expecting the approvals for AT13 injection and 85X production, and the approval and certification of the producing or production facilities dedicated to CO2 EOR. So all that's positive news. Somehow that seemed to have got lost in this concept of buying Fram. And, to reiterate, that option was negotiated back in 2017 at a fixed price of $4.2 million, long before COVID-19, long before changes in oil price, long before the regulatory process to get approvals. And I think it was in July we made an offer, which we thought was a realistic price, which was not actually replied to, which was fine. And then somehow there's this misconception that paying $4.2 million for Fram is some kind of very attractive proposition for our shareholders and management. So just to put it in perspective, that would buy us 6 to 8 CO2 EOR projects anywhere onshore Trinidad of our choosing, anywhere. Yet we're going to, spend that kind of money potentially, or we're going to spend that kind of money on buying one single asset, Fram, in one single field for $4.2 million, spend about $750,000 in transaction costs, legal fees, wait 2 months for the UKLA prospectus to be issued and approved, pay 6% fees to brokers, dilute shareholders, and what? To buy back half of our own CO2 EOR project? Well, I'm sorry, you don't have to be, maybe we should have a program called Who Does Not Want to Be a Millionaire? And basically, have one of the questions, why would you buy Fram under those circumstances? So it is a pretty annoying that concept hasn't, filtered through into the market. But, I can say here and now, our business strategy is not going to change. We are driven to developing the business. We're driven to effectively having an opportunity to divest of the business once we've got the momentum in place to do that and the projects in place to do that, which we are developing new projects as we speak. That's our strategy, and we're not going to deviate it from it. So unfortunately for you, anybody out there who feels that, this is a good time to drop the share price, well, good. If you're going to do that, fine. That's your prerogative. But our loyal shareholders can rest assured our objective is to sell the business on at a profit. And we're making great progress in doing that. We've ticked all the boxes we set out to tick. And now we're moving forward into the production phase. The training phase of the pilot was adjusting the CO2 volumes, adjusting the pressures, etc. So don't read too much into the production data, at that time or during that time. What you need to look at is going forward from this point on, which is the production phase, which is going to scale back and scale the economics in terms of the current oil price. And that's, sets the scene for developing the new projects.
Yeah, well, I made it perfectly clear in the blog that that the FRAM thing that was announced, actually, it had already been announced by the other side, but that it was nothing, that was just a very small part of it. Everything else goes on as normal.
Well, exactly. And normality is about developing the business outside of Innis Trinity, developing the business to sell, having the exclusivity over CO2 supply. You can't do CO2 EOR without CO2. Maybe that hasn't filtered through to some people.
Good. So now you've talked about the injection and the volumes, and of course you've always talked about up to 5 production wells. How does the economic model work now?
Well, based on what we've got to date, which includes obviously the cost of injecting CO2 and the optimum volumes that we need to use, ideally we're working on 4 to 5 production wells from one CO2 injector, which could produce a minimum of 200 barrels a day. And the net back on that would be a minimum of $10 a barrel at $39 a barrel West Texas price. That's if you control all the costs and CO2 injection, which is why the pilot was so important, because that was a fundamental part of the cost, the cost of CO2. So you put that in perspective, one CO2 project might generate you from 5 wells, $2,000 a day, $750,000 a year in profit. Now, if you scale that up into 6 to 8 separate projects, you can see how you immediately scale up revenues. Now, you can't do that in Innis Trinity alone. You have to do that with adding in new projects, and fundamental to the business model. So for that kind of reward, obviously, what we're planning at present, which is looking at new projects and developing new projects, makes it very attractive. But it doesn't happen overnight. It has to be managed in a careful process.
So this is where your big partner, Malcy Gas, comes in, I guess, because, they've been evaluating the projects with you. They've even, I noticed, been sort of very complimentary about you in one or two documents recently. Tell us about Malcy.
Well, Malcy are one of the largest conglomerates in Trinidad. They turn over $1 billion a year. These US dollars, not Trinidadian dollars, and they're into foodstuffs, they're into all kinds of things, technical communications. Obviously, CO2 is just one branch of the business. So, that's a very substantive partner, and much larger than many of the small cap joint venture partnerships that we would be looking at from an operatorship point of view. So having them alongside us, and particularly their role and their significance in Trinidad, is very important. So when they put an article or an advert in the Energy Bulletin, which is the most prestigious bulletin in Trinidad, and of course, the likes of Atlantic, which is the BP sort of Shell, LNG Consortium, BHP are all contributors to that. It's good news for us. I mean, whatever we say, as a management, it's good the fact that we're reported in that document alongside the likes of those kind of people, including the CEO of Heritage is another party to that particular document. So that's very important to us to get that recognition in Trinidad on the ground.
And they're obviously happy that they've got a long-term contract and. For a material business which they can continue to supply.
Exactly, and CO2, the production of CO2, and particularly for EOR, is one of the fundamental components of their growth business. Over the last 2 years working with them, they've realized the potential and working with us, and clearly see that it's a positive win-win relationship for both parties. So with that kind of backing behind us, it's easy to see why we're looking at other projects.
What sort of timescale do you put on this at the moment, Paul?
You know, I'm reluctant to put timescales on everything because every time I put a timescale on it, I end up shooting myself in the foot. But all I can say is we're actively working right now on new projects. They will take time to get all the approvals, etc. So I'm not expecting anything to convert into an operation in the next 6 months. Potentially, 6 to 9 months is what I'm looking at. But in the meantime, we're using those 6 months to push ahead with Trinity, prove the model, prove the production, prove the economic model. So all these things are important for getting to the next stage of adding new projects. Nothing happens quickly in Trinidad, as you know. But
and that's the same when they haven't got COVID.
Well, yeah, no, I mean, I can't joke about COVID because it's such a critical thing. But irrespective of COVID-19, Trinidad is a very slow place to get approvals and to get things moving, and you just have to accept that as a company. There's no. But having said that, I had a conversation today with some other party who shall remain nameless, who took several years to get their environmental certificate for CO2 EOR years ago, and we got ours in 6 months. So, there are positives as well as negatives in terms of the regulatory process. And the point is, now that we've gone through that pain, if you like, of getting all these approvals and regulatory approvals, it sets the template for going forward. We use this template and makes life a lot easier when you go for the next project, because you give the regulators the template.
Yeah. And as you mentioned, you're building a business which will, in due course, be for ultimate sale, but you've got to make it oven ready yet.
We're getting it oven ready. It's just a question of what temperature we have to turn the oven up to. So, but that's the key. In this market, everybody ought to appreciate that the public market is not giving value to your projects. We're a project-driven company. The only value significant value we can create is through divestment with our peer companies and people willing to buy a business with greener credentials, and that's where we get the true value. And that's not a market value. That is set by the industry. It's not set by the markets.
Excellent. I think, unless you've got anything else, we've done Trinidad pretty much. If anything else to add on Trinidad, please say so. Otherwise, I'm going to move on to Morocco.
Morocco, we're all disappointed that we can't get to drilling like today. And we should have been drilling by now, and we should have completed the wells. But everybody will appreciate that COVID-19 doesn't allow anybody to set timetables, particularly with the second wave throughout Europe being impacting operations on the ground, and particularly if you're onshore operations, because, as I say, you're embedded in the local community. So that makes life, very, very difficult. And safety is paramount. Nobody's going to put themselves at risk for any operation. But we've used the time to develop a new prospect, which is additional, which we've alluded to before. That's now being signed off technically by a third party, and that's just going now to a CPR. So you might say, well, big deal, everybody comes up with a prospect. But the point about this is, with COVID-19 and the delays, it gives us the opportunity to put a bigger drilling program together with maybe up to 4 or 5 wells. And therefore, there's an opportunity here to use this downtime, if you like, to get something material together so that when we are allowed to drill, we are drill ready, whenever that may be. And I'm not putting a timetable on it because I can't tell when COVID-19 restrictions are going to be lifted sufficiently. When we can commence drilling, we have the opportunity before then to bring in partners or other entities for a second, third, or fourth well or fifth well. We've got 5 locations. And although that sounds fanciful, you just remember what drives this. You've got a rig on site, so the cost of second, third well comes down proportionately. You've got a neighbor, ConocoPhillips, one of the largest oil companies in the world. They won't come in tomorrow. They won't come in the next day. But if you prove up through 1 or 2 wells material gas volumes that completely satisfies the Moroccan gas to power market, not just now, but for the future, which is what Griffiths is capable of doing, then that's quite attractive, 2 kilometers from a pipeline. So there's a lot going for us in terms of using this downtime to expand the drilling program. And that becomes even more necessary with COVID-19 because we need to bulk up all our assets. We need to bulk up all our personnel, and we need to get a good bang for our buck. And you can only do that if you expand the program and not reduce the program. And the other thing I would say, and I know everybody out there says, oh, you would say that, wouldn't you? This is the best prospect I've ever seen in 44 years in the business. And that's because of its commercial attractiveness, its cheap drilling, its geology, first and foremost. And I think I'm in a position to say that because I've been involved in Libya, I've been involved in Argentina, I've been involved in Colombia, I've been involved in Abu Dhabi over 44 years, and I have never, ever seen anything where I could spend $2.5 million and get a TCF of gas 2 kilometers from a pipeline with good geology that I'm very, very comfortable with. And that's why I'm a 20% shareholder. And that's why I don't want any more dilution. This is a fantastic opportunity. Its risk reward is unbeatable in many areas of the business right now.
Yeah, I mean,
that's what drives it. That's what drives Morocco, and that's why we're going to drill Morocco, come what may. And I'm sorry to disappoint anybody out there who might be feeling that there's the opportunity to drag us down on the back of that. Listen to me. We are going to drill Morocco. We will not be defeated. We will win. And it's that attitude that has dealt this country in the past and put it in good stead. And it will help us through COVID-19, all of us through COVID-19. Can do, will do.
Excellent. Now, you've nicked that great quote, your most compelling risk-reward opportunity for 40 years. So before I finish up on Morocco, and of course, the other thing I was obviously going to say is that your marketplaces are fairly well assured. You've said you're 2 kilometers from the Maghreb pipeline for exports. You've also mentioned in your interims that you're only 8 kilometers from the railroad link to the industrial markets. And of course, Morocco, which you've sort of alluded to there, remains fiscally very attractive, and with a huge demand in gas to power. Is that a fair way of putting it?
Yeah, I think that's absolutely right. Nothing has changed since we originally got into this project. There's been no variation whatsoever in the parameters of the attractiveness of the project. And that's another reason for driving very hard for a 5-well drilling program, because that will prove a plan of development. That will prove an asset with the plan of development, or the submission of the plan of development, to sell on to an entity that wants to be the biggest gas producer and biggest gas to power provider in Morocco. And that's our incentive. And we can do that in the space of 6 months from COVID-19. So why would we not be prepared for that? That's the opportunity. We don't get opportunities like that.
It does sound absolutely first rate.
And I would say, and I know everybody, you've got all the cynics, saying, oh, he would say that. Well, I'm saying that from experience. I'm not saying that because for any other reason other than from experience. And of course, I'm aligned with my shareholders because I have a 20% interest in the company, and that I always want to be in that position.
Excellent. Should we move on to Ireland, Paul? Because although, if I'd asked you a year ago, I suspect we'd have had a slightly more depressed conversation, but it all starts to pick up a bit, hasn't it?
Sometimes I won't say you get lucky, because we never do anything by accident, but we did have a bit of expertise on LNG in the company through Ronald Pilbeam. And obviously, we thought we'd test the idea of LNG in Ireland, not onshore LNG using shale gas, but offshore LNG using non-shale gas. So, when we started that process in December, we were thought, this is something, we can talk about, but okay, it won't get very exciting. Well, within 6 months, we now have, a viable project. We now have one of the largest FRSU floating regasification vessel providers in the world aligned with us, and you'll see who they are in due course within the next month, I'm hoping, and when we're allowed to announce that. And then we have the LNG supplier. We have the traction with the regulatory authorities, believe it or not. And we also have in discussion with on gas sales with various parties wishing to buy the gas, which we estimate first gas 2024. And of course, you'll say, well, that's a long way off. Well, it's not a long way off when your national entity is planning security supply and your 5-year program, and we're figuring in that 5-year program. And the last thing we've done is commission or pay for an exercise to look at upgrading the scope of upgrading the onshore network. And that's with one of the country's stakeholders in infrastructure. So we wouldn't have made that progress if this was a project going nowhere. So we're very keen that the next steps are, they're going to take some time, the regulatory approvals and the environmental approvals and the LNG import license. But the plan is to get all those contracts and regulatory approvals together, the LNG import license, the gas sales contract, and the LNG contract, all negotiated, all tied up, and then sell the business on as an LNG import business before first gas. And that commands a huge value in the current climate where LNG is king in this transition period. And everybody knows that.
Excellent. And you're effectively project manager with an equity stake in this?
We control it 100% at present. We're the project manager. All the parties, every single party who has signed CA with us, every single stakeholder has signed it with us as Predator Oil and Gas as the leader of this project. So we are, Predator LNG Ireland is the project leader. And that will come as a surprise to a lot of people, I'm sure. But that's based on our relationships, our management relationships, our experience, and our vision and ability to deliver. And we've delivered something in 6 months that other people have taken years to try and get off the table.
Lovely. As we come to the end, Paul, just for your final comments, it's easy for me to say, but it is clear that Predator is, as they say, a project-driven company with an exit strategy in each of the projects, which are in themselves very credible. Just give us a bit of a wrap up. I mean, you've given some timings and everything else, but within the next 18 months, you should have had quite a lot if you were coming back to talk to me about that then.
Well, I think, as I said, I don't like to put any more, don't like to put times on anything simply because, sometimes you end up shooting yourself in the foot with COVID-19 and all other aspects that come along and sometimes derail you. But what I would say is we've made the progress that we intended to make on all 3 projects: CO2 sequestration, gas to power in Morocco, and LNG. 3 very different projects, 3 very different businesses, all in separate subsidiaries, all moving along nicely, all at the stage where we're going to be tying up relationships and announcing relationships going forward over the next 3 to 6 months, if not. And on that basis, we're looking at end 2021, but more likely 2022 to divest. If the Moroccan drilling program goes ahead as planned and is completed next year with a plan of development, certainly by the end of next year, beginning of 2022, we're in a position to divest. If LNG goes along as prognosed at present, probably more likely late 2022, 2023, before we would be in a position to divest on that. And CO2 EOR Trinidad, we're going to be spending the next 6 months on operations, putting projects together. I would look at maybe probably late 2021, to look at divestment opportunities. But if someone comes along earlier than that with the right kind of price and the right kind of deal, of course, we'd look at it. But that's what we need to emphasize. This is a medium-term business game. It's not a day-to-day operations game. The plan is to mature and sell with all the different aspects of the business put together and de-risked.
Excellent. Paul, thank you very much indeed for being my guest CEO today.
Pleasure.
So very kind of you to join me. Thank you very much.
Thanks for the opportunity.
I've been Malcolm Graham Wood, and I've been on Core Finance TV doing my CEO interview. My guest, of course, has been Paul Griffiths, CEO of Predator Oil and Gas. Thanks to him for joining, and I look forward to seeing you again soon. Bye now.